Welcome back to Explain the Charts, your ultimate destination for in-depth market analysis and understanding the forces driving asset prices. Today, August 16th, 2025, we're diving into the latest developments surrounding BTCUSD, a market currently grappling with significant macro and geopolitical headlines that have sparked considerable volatility. Just yesterday, Bitcoin experienced a sharp downturn, dramatically plummeting from a fresh all-time high near $124,000, a level many were eagerly watching, to around the $118,000 mark. This sudden and impactful drop was primarily fueled by a hotter-than-expected producer price index report released recently. The PPI data cast serious doubts on the Federal Reserve's previously anticipated willingness to implement interest rate cuts as early as September, dampening market sentiment across all risk assets, not just crypto. Adding another layer of complexity and market uncertainty, we've seen conflicting signals regarding the highly anticipated U.S. Strategic Bitcoin Reserve. Treasury Secretary Scott Bessent initially stated the SBR would comprise existing government holdings with no new purchases, only to later reverse course, committing to exploring budget-neutral pathways to acquire more Bitcoin. This policy flip-flop, coupled with a key advisor's recent exit from the White House's Crypto Council, highlights the evolving and often contradictory regulatory landscape for digital assets, creating an environment of cautious speculation. While some news points to inherently positive long-term adoption, such as Citibank expanding its crypto custody services and the impressive $1.3 billion in ETF inflows over the past 6 trading days, the immediate impact of inflation fears and policy confusion cannot be overstated. Even the Reddit community, often a hub for bullish sentiment, acknowledges Bitcoin's long-term potential by calling it programmed up forever, but even they are reacting to these short-term pressures. It's a clear indication that traditional economic data continues to hold significant sway over the crypto market, despite its decentralized nature. Let's now turn our attention to the charts themselves to meticulously examine how these fundamental factors are translating into observable price action for Bitcoin. Looking at the one-day chart for BTCUSD, we can clearly observe Bitcoin's impressive, sustained ascent over the past year, marking a clear long-term bullish trend. From its significant lows around $49,000 in early August 2024, Bitcoin embarked on a strong bullish trend, carving out higher highs and higher lows with notable strength. The psychological and technical level around $100,000 served as a persistent resistance point throughout late 2024 and early 2025, resisting multiple breakout attempts before finally being decisively broken in January 2025. Once breached, this $100,000 level transformed into a robust support zone, as evidenced by strong bounces seen in February and March of this year, validating its new role as a floor. The rally truly accelerated in April and May, pushing Bitcoin to consecutive new all-time highs, eventually culminating in its most recent peak of approximately $123,380 on August 13th. However, the very next day, August 14th, saw a substantial red candle form, indicating significant selling pressure as price dropped sharply from the $123,000 range to below $118,500. This strong single-day rejection, accompanied by notably higher trading volume, directly correlates with the negative inflation news we just discussed, showing a swift market reaction. Currently, Bitcoin is attempting to find footing around the $117,000 to $118,000 range, which is positioned just above a minor support zone from mid-July around $115,000. A critical level to watch on this daily time frame is the $115,000 support. A decisive daily close below it could signal a deeper correction and potentially open the door for a retest of the $100,000 psychological level. Conversely, a strong rebound from the current levels would first need to overcome immediate resistance at $120,000, then the $123,000 prior high, before aiming for new territories. The path forward on this time frame suggests significant battles at these key price points. Drilling down even further to the 15-minute chart, we gain immediate insight into the microstructure of the market during the very recent hours of August 14th and 15th. This time frame distinctly highlights the sharp, rapid price movements that occurred right after Bitcoin reached its all-time high. Observe the rapid sell-off on August 14th, stemming from the highest points, and then the attempts to establish a floor around $117,000. Volume during these initial stages of the drop was relatively high, validating the swift price adjustment. In the latter part of August 15th, you can see price consolidating in a very tight range, indicating a period of indecision or a temporary equilibrium after the sharp decline. For highly active day traders or scalpers, meticulously monitoring these 15-minute candlestick patterns, combined with real-time volume analysis, is absolutely crucial for identifying quick entry and exit points. The low of $116,560.90 on August 15th acted as immediate intraday support, showing where buyers stepped in to prevent further slides. Breakouts from these narrow micro-ranges, especially if validated by a noticeable increase in volume, often present fleeting short-term trading opportunities, but carry high risk. However, traders operating on this time frame must exercise extreme caution due to the prevalence of false breakouts and rapid reversals, which can lead to quick losses. Always prioritize strict risk management and keep an eye on the higher timeframes for overarching trends, as these micro-movements can be deceptive. Now let's switch to the 1-hour chart to analyze a period of significant volatility from earlier in July, applying the same principles for short-term analysis. Even before the very recent events, this timeframe often reveals important intraday trends and reversals, as seen here in late July. Notice the strong upward move around July 27th, pushing from $117,900 towards $119,800, demonstrating clear bullish hourly momentum. This rally encountered resistance near the $119,800 to $120,000 level, after which price entered a consolidation phase. Subsequently, a sharp rejection occurred, sending price down towards $117,600 on July 28th. This pattern of push, resist, and retrace is common on shorter timeframes and helps identify dynamic support and resistance levels. The ability to identify these intraday pivots, such as the $119,800 resistance and $117,600 support in this example, is key for tactical trading. Observing volume alongside these movements helps confirm the strength of the breakout or breakdown. For instance, a surge in volume during the initial upward push indicates strong buying interest, whereas a low-volume retest of resistance might suggest weakness. Understanding these hourly dynamics, even from past data, helps prepare traders for similar rapid shifts in the current market environment. To sum up our in-depth analysis for BTCUSD as we head into the weekend on August 16th, the market is at a fascinating crossroads. In the short term, Bitcoin's price action is highly sensitive and reactive to prevailing macroeconomic news, particularly developments around inflation and central bank policies. Looking at our charts, the immediate critical price levels to monitor for bullish continuation are resistance zones at $119,000 and $120,000, followed by the formidable all-time high zone around $123,000 to $124,000. On the downside, crucial support lies at $115,000 to $116,000. A decisive daily close below this could signal a deeper correction. Should that support break, the next major target would be the psychologically significant and historically proven support at $100,000. From a long-term bullish perspective, the fundamental narrative for Bitcoin remains robust. It has consistently demonstrated resilience and an overall upward trajectory over its history, especially with growing institutional interest. The ongoing discussions and potential implementation of a U.S. strategic Bitcoin reserve, despite some initial mixed signals, hints at substantial future institutional demand, which could be a powerful catalyst if concrete steps are taken. Furthermore, the impressive surge to new all-time highs just days before this current pullback demonstrates that significant underlying momentum is still present and could easily resume if favorable macro conditions return. However, the primary bearish case undeniably hinges on persistent high inflation, which would compel central banks to maintain or even tighten monetary policy, negatively impacting all risk assets, including cryptocurrencies. The sharp and high-volume rejection from the recent peak strongly suggests that a significant overhead resistance zone has now formed, and overcoming it will require equally strong, sustained bullish catalysts and buying volume. Our unbiased prediction for the very short term is that Bitcoin will likely continue to consolidate within the range of $115,000 and $120,000. And we assign a 60% likelihood to this scenario given the current indecision. A definitive breach and hold above $120,000, with an estimated 40% likelihood in the coming days, would strongly reinforce a bullish continuation towards new highs, especially if accompanied by positive news on inflation or clarity on the SBR. Conversely, a decisive drop below $115,000 with a 50% likelihood would suggest a deeper correction is underway, potentially towards the $100,000 mark, particularly if inflation fears intensify or SBR talks fizzle out. For traders, observing market reactions to upcoming economic reports and any further statements from Treasury officials will be paramount. Investors and traders should vigilantly watch for further clarity on the Federal Reserve's stance on interest rates, upcoming inflation data, and any concrete announcements regarding the strategic Bitcoin reserve in the coming days and weeks. Always remember to conduct your own thorough research, implement strict risk management strategies, and remain agile, adapting your trading plans as new information unfolds in this incredibly dynamic and fast-moving market. Thank you for joining us on Explain the Charts. Don't forget to like this video, subscribe to our channel, and hit that notification bell so you never miss an essential market insight.